The UK economy is facing the biggest test in 30 years as we have soaring bond yields, a tumbling pound and rising mortgage rates. Are we actually on the brink of a financial storm, or is there a silver lining out there for those who act quickly? So what's the background? Soaring bond yields and borrowing costs. 30-year gilt yields, government bonds, reached 5.22% this week, the highest since 1998, so like nearly a 30-year high, surpassing the peaks of the 2022 mini-budget turmoil, which Keir Starmer has been referring to as the worst financial crisis in recent history, and has led to Liz Truss issuing a cease and desist letter to get him to stop paying that, because she's saying this is actually the worst in recent history. The impact that this is having: higher borrowing costs, significant pressure on the housing market, and potential mortgage rate hikes, and increasing debt servicing burdens for businesses. I mean, if you're a business and you've set up your store thinking we're going to borrow this amount of money over this period at this rate, and suddenly it starts going up in price, you have no choice but to pay it, which can be a real problem for small businesses. We've got the pound, which is on the slide. It's fallen from above 125 now to close to 122. It's expected to fall further because it's not so much the pound's weakness. I mean, the pound is in a terrible malaise situation. You know, the UK economy is just going nowhere, and the government is not giving anyone any confidence that it is going to go somewhere. So that's the worst thing. Basically, you have jobless claims ending week December 27th in the US were far lower than expected. It was expected to be around the 222 mark. They've ended up at the 211 mark, which is very positive. Apart from that, the dollar is benefiting from investors. The expected incoming policies from Donald Trump, which will boost economic growth and inflationary pressures in the US economy. So what's really going to happen is that the Fed is not going to be able to cut rates as quickly as it thought. Therefore, it's not a bad time to be keeping your money in US dollars, because it's not going to depreciate. That's what's going well on that side of the Atlantic. The dollar's actually getting stronger, but the malaise on this side of the Atlantic means that the pound is weakening, which is not great. Other things that have gone wrong that have been criticised: there's very little growth being stimulated and very little to control borrowing in the UK. Rising bond yields are eroding this £10 billion buffer that Rachel Reeves set aside in her autumn budget. So it means her fiscal rules are potentially going to be broken. Analysts are saying there's as little as £1 billion left, making it difficult for the Chancellor to meet her fiscal rule of balancing day-to-day spending by 2029-30. We're not getting any information about what's going on either, and that's the worst thing. You know, when you've got silence, people's gossiping fills that silence. You know, all this financial instability should be being dealt with by Rachel Reeves with clear views on what she's doing about it. Apparently this week she's on a plane to China on a trade mission with the Bank of England governor. Conservatives are suggesting she's missing in action and should have cancelled that and should be here. This is fueling more speculation that corrective action in the March budget could involve either tax hikes or spending cuts, despite Reeves committing to not raising tax further. But I mean, the truth is, they have not stuck to anything they've said in their manifestos, so really, it's a complete mess. What does it mean for housing and mortgages? Borrowing costs will stay high for longer, and they may even go up. So instead of falling like they're hoping it will, that's going to put pressures on first-time buyers and on landlords, and it means we're going to have stagnant growth in the UK economy. These things, you know, are not what we wanted, and we're not seen to be what's happening before the latest budget. It's not great. What can the government do to try and reduce its huge amount of borrowing? Stoke inflation. And that's what they're talking about happening in the US. But the US, you know, has got a mega juggernaut of an economy, whereas the UK is not that situation. Stimulating the economy is more important in the UK rather than inflating ourselves out of debt. Is there a silver lining? Well, yes. If you buy a property in a market with a falling currency, it's making it cheaper. At the moment, if you'd have bought a £200,000 house a year ago, then today it would actually be 3% cheaper in sterling purchasing terms. If you have a US-based currency or one that's linked to the US, the likes of Singapore dollars, Hong Kong dollars, any of those sort of currencies. What are the other benefits? For the UK economy, cheaper exports, that can be good. Increases in demand for UK products because they're cheaper, that can be good. But that's only very short-term stuff. It's also good in a time of recession because it helps to increase aggregate demand. In 1992, when the UK left the ERM, the pound depreciated and this helped the economy to recover. But it's only very short-term stuff, because what happens in the longer term is that we've got to buy a lot of our resources from overseas, everything's going to be a lot more expensive for us to do that if we're buying in pounds. So it's short term, it's very beneficial. So you jumped in now and you bought a property, you could potentially get up to a 5% discount if it goes away continuing. What are the negative sides to it? It's expensive for UK tourists abroad. Imported goods become more expensive, as I said. Inflation, a falling pound does cause inflation. So longer term, we're getting more inflation again, which is not great. So there's a lot of negatives for having a falling currency. There's not that many positives. So is there a silver lining? If you have the cash, jump in and do it now. If you don't, I wouldn't try and beat it. So let's just cover some of the questions I've had for the last few weeks. OGBs, renters that overtaken mortgage payments. This will create a mass homeless endemic. Hence, government will have to force banks to give mortgages to people who may default. This will end up being a subprime mortgage situation, 2008, all over again. The banks will just take advantage of this by over-leveraging it and repackaging the risk, make even more money against the value of the fallen asset. Then this will collapse the economy and the government will have to bail out banks and taxpayers with your money again. And then banks will stop lending to everyone, raise interest rates, and we're back to square one. That's why current house prices are not sustainable. It will inevitably crash unless the government takes drastic measures. Well, I don't know if OJBs has been watching films about what went on in Wall Street and banks too big to bust. That's a very negative view. There's a lot better ways to lend money. You look at people's credit rating from a rental payment perspective. You give people who are coming into the market subsidised mortgages. They don't have to be as expensive. So there's heaps of different ways. You look at economies around the world that they're dealing with it. I don't believe there's a subprime crisis on the way. The stress testing that goes on now is already 7 times, which is nearly 2 and a bit times stronger than it was. It's not the end is nigh from that perspective. Shady D365, great name. Nothing ever happens the way it's predicted. I suppose you throw out enough theories, someone will nail it. One thing is a guarantee. The government will keep spending and you will get screwed over. I think probably the government will keep spending, and I think probably it will lead to 4.5 years' time them being out of power. But interesting enough, they're not spending on everything. When Tony Blair came into power as a Labour leader, he spent a lot on the arts. The Bristol Theatre were running an undergraduate course. It's just had to close because they're getting no funding at all from the government. And you had some great actors that came out of that. Jeremy Irons, the guy who played in My Left Foot, Naomi Harris, and they're closing now because they're not getting the funding. So what are they spending on? It'd be interesting to see, really, are they spending in the right areas? And frankly, I don't think they are either. So YM1, many haven't thought about the consequence of landlords selling up. Yes, there is one renter that may be able to buy that property, but previously there was one property available to rent to 10 renters chasing after that property. Now there's 0 property for the remaining 9 other renters. My own child needed to rent because she was moving whilst working, and so do many graduates leaving university. I too may rent in retirement out of choice. People just have too simplistic a view of the world and its economics. Yeah, there's no right answers and there's no wrong answers. It's a very complicated aspect. The simple view that I personally take, and it's just my view, is that if you keep on doing enough good things in the property world correctly, then you will build up a good property portfolio. And if you look after tenants correctly, they will be happy with what you're doing and they will stick with you and support you. And if you have problems with the property, then they will say, well, let's fix it. I had a Polish gentleman who was renting a property of mine in the Bay in Cardiff. He put a new boiler in for me. He redecorated it. He was fantastic, because we looked after him, he looked after us. If you do that as a landlord, you won't have problems with getting good tenants, and all this talk about the tenancy laws changing and no-fault evictions don't become real. You just have to manage what you're doing and try and do as many good things as possible to create your snowball of good effects. So there we go, that's Market Wrap. Hope you enjoyed it. Do like, subscribe, please, and recommend us to other people if you can. If you do get an opportunity soon, you may be able to have a look at our new book that's come out, the Expat Property Playbook. I can't show you too much because it's only just fresh out and not available yet, but we'll send it out if you ask for it. Cheers, cheerio, bye-bye.